Ladies and gentlemen of the crypto space, we're live on a Friday, November 7th at 11:37 a.m. How many times have we given that opening statement? So many times over the last years, and all of those last years only encompasses a small part of really the story that I've always tried to tell, which is not what has occurred post 2020, but what has occurred post 2020 in consideration of, in the context of what occurred prior to 2020. It was such an inflection point, everything that occurred post 2020. And really, to be a little more specific about time frame, it's not post 2020 as in like in 2021. No, we're talking about like the start of 2020, what really started to play out in January, February, March, and Q4 of 2019, October, November, December. Everything prior to that is different than everything post that time period. And it's such a remarkable experience. You don't necessarily see it in the data. You had to live it, you had to breathe it, you had to experience it, and you have to remember it. So obviously for folks that are like, should I invest in crypto? You're not going to remember pre 2020. You're just thinking about getting involved nowadays. So you're not going to have that memory to go on. So it's at a significant disadvantage contemplating capital allocation to a market where you don't have that memory of what it felt like, what these markets felt like prior to 2020. And really, it was more than 2020 because you really had to experience 2016, 17, leading into 2020 to remember all the years involved, all the years it took to get from what happened in 2016 and 17 and the doldrums in 2018 and 2019. And then obviously the liquidity bazooka that occurred in 2020, which could probably be argued to be a significant component of what emerged post 2020. And when I say this whole what emerged thing and what it was like, we're talking about the reality of these markets being financial markets, markets with actual currency and credit and derivatives, foreign exchange, a capacity to exchange different currency units. And then obviously the emergence of business product, fintech product 4 and 5. Do I repeat myself ad nauseum of what product 4 and 5 are? Liquidity financing and liability printing, much more sophisticated products as compared to these very fundamental products of foreign exchange credit and derivatives. Those are almost primitives in comparison to liquidity financing and liability printing, which are almost B to B products, business to business products, as compared to B2C, business to consumer products. So, how does all of what I just said, all the complexity of what I just said of these 5 crypto fintech products fit into the story of what I just started trying to tell? They didn't exist prior to 2020. There was nothing in 2019, and there was zero in 2016, 17. Back then, and I've seen this. I saw this on social media. Saw this on X shortly ago, and I found it fascinating. The price is the product, and that is when I saw that, I was like, oh shit, that's exactly what it was. In 16 and 17, price was the product because there was no product. There was nothing. It was vaporware, a capital raise, an initial public offering called an initial coin offering, which is the same exact thing. Just convincing someone to give you money to do something potentially in the future. It's nothing because nothing was created, nothing emerged. There's only all we have from 16 and 17 is a few very large treasuries that accumulate a large amount of Bitcoin and a large amount of Ethereum. And I'm not going to name them off the top of my head because I don't remember them all off the top of my head. But for instance, 2 products that come to mind, 3 products that come to mind that started really catching a bid in 2020 was Kyber, Bancor, And Syscoin is the only Masternode product from 16 and 17 that still exists today, and I think still has meaningful technological value to these markets. Um, so that's probably the biggest takeaway, that folks that don't have that memory, that experience, that recollection, that knowledge of what it smelled like prior to 2020. The biggest takeaway is that none of what exists today existed back then, and you would have never known. You would have never known back in 2019 what was going to play out. Uniswap beta. Oh dear God, what Uniswap looked like in Q4 of 2019. You know how much liquidity was on Uniswap in 2019? $500,000, and that wasn't even just stablecoins. I I I I I definitely have social media posts where I pulled up old Uniswap V1 um, analytics, and then they had a dashboard back then. I could probably track it down. I'm not going to track it down live on stream, but that's where we came from. Came from nothing, and now we have how many billions of dollars a day that flow through Uniswap, that flow through Curve, that flow through Fluid. How many billions of dollars worth of deposits? Dare we talk about Aave? Oh dear God! What a remarkable progression of events that took Aave from where it was to where it is today. So that's the most important thing that I could offer you folks. This isn't, I could talk, and I have talked about protocols, about, oh, what can you invest in? What's the ticker of a coin that you could buy that may or may not be a good investment depending on one's stomach and financial capacity to withstand volatility. More importantly, is how the things that we're talking about, these products and protocols and businesses, how they fit into the larger story that started so many years ago, and that should offer significant insight into how we should feel today, what we should think today about what's going on. And that plays into stuff like Raul and Julian with liquidity, and how it was never a Bitcoin cycle. It was always a liquidity cycle, and how we have an extension of the liquidity cycle because the business cycle is all delayed because the fucking government shut down. And it's not just the government shutdown. We're talking about the concept of QE and QT. And guys, we went through years of people on social media calling the Fed printer go burr. And nobody understood what it meant. And I spent years explaining to you guys what it meant. All this macroeconomic conversation was not for nothing. It was to give us a fundamental understanding of how and why the system is doing what it's doing. And that's exactly why I remind everyone, I come back to this chart so often, of the move indicator. And everyone's like, what the hell is the move indicator? Capston's talking about the move. It's broken down. It's not, nothing's happening in the markets yet. No, it's because it's a forward looking indicator. This indicator tells us in the future, in the short term future, short to midterm, conditions for printing of dollars outside of the US significantly increases in favorability. It's as simple as that. And now you really got to understand. I'm sorry, what? We could print dollars outside of the US? The Federal Reserve isn't the money printer? Or they're only a small part of the money printer? Or the US government and the Treasury only printed, almost 90%, I'm sorry, 10% of dollars in existence? What? 10%? The $38 trillion worth of debt that the Treasury has is only about 10% of the total dollars that have been printed on the planet Earth. And we talk about, we are the biggest spender, we're the biggest debtor, and only the US could print dollars. No, no, everyone's wrong. And that's just not the story that I've told. That's not my story. That's literally every of the very astute macroeconomist story. That's Raul's story. That's Luke's story. That's Brent's story. That's Lynn's story. This is all their stories. Mike Howell's story. And I'm just telling you the same shit that they've told everyone. But I put it into a story in a format that's consistent with what I'm interested in these crypto markets. I put everything into context with my investment methodology. That's the point, and that's the story we've been trying to tell for all these years. Oh my. So we're not there yet. Government shut down. TGA has $1 trillion in it. So what are conditions where markets start to get weird? All right, Treasury spends a $500 billion out of the TGA, spends it into the economy. Oh, that sure as hell gets people's dopamine cooking, and that bleeds right over into markets. Fed stop QT. That means they're selling assets into the market, which basically drives down price and drives yields up. What you want to drive is prices up and yields down. And that means collateral prices are rising. So when the Fed is a buyer of assets, that affects the entire market. If you got the biggest bank of the planet with an unlimited balance sheet capacity to buy as many assets as they want, that directs the behavior of everyone else, or it influences the behavior of everyone else to buy assets. And we're talking about primarily treasuries and MBS, mortgage-backed securities. And so they're buyers, and all of a sudden the price of collateral starts going up and interest rates start going down. So what have I told you guys? You need the interest rates to come down, you need the price of collateral to go up, you need the volatility in that collateral to go down, and then, and only then, does the money printer go. And it's not the Fed printing the money, but the Fed has a significant contributive, or is a significant contributing factor in a capacity for the system to print money. The system prints the money, and the system is called the euro dollar market. Now pull your head out of whatever corner of the internet you've decided to live in, and expand the story. That's the biggest thing I could offer to folks. The story is much more nuanced and larger than most storytellers present it to be. Oh, the Fed hasn't started printing yet. There's much more to it. It was never just about QE. It was never just about government borrowing. It's always about collateral volatility, collateral pricing, and really the Eurodollar market, which is in good part a great deal of what Raul and Julian talk about is the business cycle, because the business cycle really kicks off when the global currency supply is significantly expanding. So folks have looked at global M2, but that's only a small component of it because that is basically the system just coming up with the dollars it needs to pay its liabilities. So the system always needs to have more dollars because there's always interest on dollar debt to be paid. And we're talking about globally. There's a difference between that scenario and when there's a favorable condition to print dollars, where it's like, all right, not only are we going to print the dollars we need to pay our debts, but we're going to also juice the supply because maybe interest rates are falling, or maybe our global Ave health factors going up, collateral prices are rallying. So now instead of hiring or firing 10,000 people, we're going to hire 10,000 people. And this all affects businesses. And that's literally what the business cycle is. So the business cycle really kicks off when the move indicator seriously rolls over, when 10-year yields roll over and collateral prices start to rally, and when the dollar starts to roll over. And the dollar has rolled over. It's below 100, but it just rallied strongly back above 100. And the move indicator rolled over down to the 60s, but it just rallied back into the 70s. And 10-year yields were below 4, and now they're back above 4. Okay, let's check back when 10-year yields are pushing firmly towards 3.5 and squeaking their way to 3, and everyone's like, oh shit. Are they going to keep going? Because that's when things get weird. When everything goes in the direction, everyone's like, are they going to keep going in that direction? Are they going to stop at 3.5 or push towards three? Because that's when things get weird. Is the move indicator, oh, it's down at 60. Oh, is it going to push to 50? Is it going to push to 40? That's when things get weird. Is the dollar down at 95? Oh my God, it looks like it's going to go to 94, 93, 92. That's when things get weird. We are not even close to that right now. We're at the place where everyone capitulates because they have no idea why this market does what it does. But there is a rhyme and a reason to this market, and it's all about dollar supply. And that is what guides me and my story and what to allocate capital to and how to manage finances, dollar supply. Because and I'm going to go to the comments before I keep rambling, my rambling man. Um, uh, Dollar supply in these markets is very similar to the macroeconomic story we discuss. Because once you understand it's all about supply of dollars, you can follow the dollars. If all of a sudden there's a significant expansion of dollars in these markets, that's going to significantly affect the pricing, consumer price inflation in these markets. And if there's a significant capital rotation of dollars from Arbitrum to optimism, or optimism to base, or base to Fraxel, or Fraxel to mainnet, or what have you to what have you, it's a hot bowl of money. Because what do you do with dollars? You buy things, and that causes prices to inflate. And that's probably, I'll end on that note as well. It's so important for folks to understand the word inflation, and everyone just doesn't. Y'all begging for a bull market is literally you begging for inflation in these crypto markets. You want the price to inflate, and that means fewer people could afford it. Everyone screams for home prices to deflate, to go down, and literally you want crypto prices to inflate so people can't afford them. So just understand what it's very important for people to understand what they're asking for. People get upset when the price of food inflates, and they get happy when the price of crypto inflates. Now, you see, just my point isn't necessarily apples to apples or apples to oranges. Is that um, just appreciate the word inflation, and a bull market is begging for the inflation of prices in these crypto markets. And the inflation of prices in other markets people don't like, but the inflation of prices in these crypto markets people do like. That's a very important word to really appreciate. And as we appreciate the subtleties of economics, the definition of words make a difference. This is something I've grown to appreciate over the years. Okay, I'm done rambling. Sir Joe, President accounted for. Sir, yes, sir. Gazika, greetings, Cap. If you're on X or on YouTube, please feel welcome to ask any questions. Happy to talk about anything. Maybe we'll keep it short and sweet for the day, but otherwise, let's keep the Bitcoin chart up as we discussed. We're on the weekly. So before I go on from comments, I will note a couple of technical observations. What we want to see on the weekly in 2 days, 8 hours is a close above the 50 SMA here, dark green line. So these are very slow moving candles. I look at weekly candles. Each one of these candles is 1 week time. This little segment of chart goes back to 2022. People got to understand the time frames that I look at, and then may wonder why I don't really have much sentiment about a Monday or a week or a month. A month, like literally, this is a month. This tiny little section right here. Meanwhile, this is obviously. Oh, you don't see my cursor, but you know, it's 4 candles is a month. So I look at very large periods of time. So what I want to see is over the next month, I want to see the 50 SMA hold. So look, you closed below back in April of this year. It was a wick below. Fine, that would actually be not constructive or not something that I'd like to see, a close below the 50 SMA. Because back here, in each instance of interaction with the 50 SMA on the weekly for Bitcoin in 2024 and 2025, it was only wicks. So we want to see is the wick close above like 104. You close at 103, 104. That's a very comforting sign from a candle standpoint. We'll keep an eye on that. And that doesn't mean much to me whether it closes above or below. because then it comes back to topics of conversation like, what are you going to do? Is there something to do if it closes below? It's one candle. Do you do something? When do you take action? When do you make these decisions? How do you make these decisions? And I wouldn't do shit based on one candle. Period. Spell back above 3,000. That's nice to see. Curve back at 48 cents. So we could zoom in here, give you guys a little curve update. The curve is green on the weekly after one heck of a wild push down to the upper 30s. Curve is green on the weekly. 1 week ago, the price of curve is now higher than it was 1 week ago after every emotional sentiment people had this week. And guess what? That level of interaction was right there at the 39-cent region, which is a very decent level. It's this level right here. That's a decent level. Decent level. There's your level of support, and you have that support going all the way back to 2022, ladies and gentlemen. And guess what? It even goes back to here, in my opinion. Launch support. 39 cents is a heck of a level of support, in my opinion. And boom. So that is constructive and interesting to say the least. Going on a tear today, convex and curve 13% respectively, more or less the same. Definitely good to see. Gold back above 4,000. That's always interesting. That was basically a weekly 10 mean regression thus far. Now, definitely interesting to see those wicks not even interacting with the weekly 10. Oil back below 60. That's crazy. A market is right on the line of very interesting things, but we've been saying that. You can say that for over a year. You can say that for 2 years, but that's where it is. And that's where it will be until very interesting things happen. Or until you see move at 120 and 10-year yields are ripping past 104 in a month and everything's falling apart. But that's not what we're seeing in the data. So trends tend to continue until capitulation. They continue in the same direction until capitulation. Gazika, have your views on Frax changed since they are pivoting from DeFi first off-chain T-pills monetization? Well, they are now an off-ramp on-ramp. They are a network. They are a network of networks. My views have remained favorable for Frax. They have little to no momentum traction. The technology is astounding. The classic example of the greatest tech isn't always the greatest investment. I retain a highly favorable position. I retain exposure because I have an inability to not have exposure because that was the type of exposure I chose. A purchase, not a position. And those are my favorite ways to have exposure to businesses. What's your take on convex approach to directing emissions for VLCVX yield? I almost see emissions as an unsustainable model and wonder when emissions reduce if they switch to fees. So VLCVX is purely vote rental fees. Um, why would you need to direct CVX emissions to vote rental fees? I don't think that's necessary. I think what they need to figure out is what happens post CVX supply for LP deposits, because right now a good part of APR on LP deposits is CVX. So that's probably more so what I think they need to figure out. What's next? And I don't have the answers to that. And obviously they are dominant owner, the Berkshire Hathaway of crypto in so many regards. They own all this governance voting capacity. Um, it's beyond me to even make a recommendation of what's next. Um, but I don't have any doubt that some of the greatest minds in crypto will conceive of something reasonable for what's next. My 2 cents. Not that it's the most elaborate 2 cents, but anyhow. Glad the cap is back. We have been waiting. Well, I only took Monday off. See, I only took Monday off, and everyone's looking for all this intra-week information. Nothing changed. Little to nothing changed between Monday and today. Everyone was like, Monday it was getting hot because um, everything was rolling over. Bitcoin was rolled over below 100,000. Curve was below 40 cents. And now curve's at 47 cents. And look at the technical structure. Curve interacted with the 39-cent region. Bitcoin interacted or pushed past the 50 SMA on the weekly. 2 more days. Does it close above the 50 SMA on the weekly? You don't know. So I took off Monday and I'm here talking today, but nothing really matters until we have some information on Sunday. And then really the information on Sunday about the candle body close isn't too constructive unless you see what happens next Sunday. Because you need follow-up candle, you need some contextual information. Because if you close below the 50 SMA for the weekly, and then next week, you're back above 110. Okay, so there was an aberration. You had a very brief breach of the 50 SMA of the weekly, and now you're back above it. Again, that would qualify as a mean regression. Simple as that. So, so much of looking at these markets, especially social media, is noise, and it drives folks insane. In theory, emissions reduce and price increase to balance the books, but we know that's not always the case. You see emissions as net positive and sustainable. Uh, See, this is why I like long tail emissions. This is why, one of the most hated protocols in crypto, Curve, is one that I appreciate the most, as well as Bitcoin for that matter. Bitcoin is an inflationary protocol. That boggles everyone's mind sometimes every time I say that. Bitcoin's inflationary. The supply is constantly increasing. This whole fixed supply is literally crazy when people say that. Every day there's more and more Bitcoin put into circulation. Now that obviously doesn't consider lost Bitcoin or the people locking Bitcoin or a net Bitcoin supply. But the point is, every block found, there's more Bitcoin made, created out of nothing. So the point is, it's a disinflationary protocol. So Curve happens to be a disinflationary protocol as well. So these disinflationary protocols have long tail emissions. So Bitcoin doesn't have a fixed supply. Every 4 years, there's less emissions, and that will happen for the next 100 years, and that's called long tail emissions. So I'm a fan of long tail emissions, which is me basically being a fan of Bitcoin's original monetary policy design. Um, I'm not a fan of fixed supply. I'm a fan of disinflation, which is literally Bitcoin, which is literally the same monetary policy as Curve for what it's worth. A disinflationary, long tail supply monetary policy. Hope that helps. Picked up some Curve to get a goal I have been thinking about for a while. Next step, double of what I have now. These are all reasonable things. We all must set our goals, our targets, our intentions, what we want to do, what we want to achieve, where we want to be in the future compared to where we are now. It's not easy. Most people they call this a 5-year plan in traditional finance or when you get out of college. What's your 5-year plan? You gotta have plans and you gotta shoot for your goals. Good stuff. Keep setting goals and then meet your expectations. Don't set goals that are too high or too lofty because if you don't meet your goals, it's disappointing. If you meet or exceed your goals, you feel satisfied and complete. Hope that helps. Hannah, much a pleasure. Nothing much happened this week, but I appreciate being appreciated and being missed. And I'm happy to be here and happy to help folks traverse and navigate this journey of financial management, which is just not easy. It's clearly pure insanity, and people drive themselves nutty. Uh, it's not easy to watch total net worth, and that is something that everyone looks at. They log in the Fidelity or Schwab or whatever, and you see that big number in the top left that goes up and down. And you press refresh, it goes up and down. You add your crypto portfolio, pull to refresh, up and down. That number is the most misleading, toxic number in existence. It doesn't mean anything. And that's really the core of everything I've tried to teach folks and about being a dividend investor. And that's what we do in crypto markets. We're dividend investors in crypto markets. There's no difference. The only difference is value inspection. And what we're looking for in what is the most effective allocation of capital according to our philosophy, which is rule number three, which is fuck you, pay me, of course. We want things that pay us. I hope that helps. And I'm happy to be here. I hope everything went well over the weekend. Hope everyone was as calm and cool as they could have been. Crypto Jay, good morning. Much a pleasure. Any concern regarding Curve recently? Why yield basis just got integrated into Stake DAO? I got some nice Curve governance votes. Curve is an immutable protocol that is a long tail disinflationary protocol that will have emissions for the next 100 years. Any concern regarding Curve over what time frame? In like the next 10 years? Over the next 20 years? Um, I don't think so. I think in the next 20 years, most people won't be thinking about this past week. 20 years is a long time, but Curve will be here in 20 years. And that's something I think about quite often with these ultra long tail disinflationary monetary policies like Bitcoin. Bitcoin will be here in 20 years because there will be more emissions. Curve will be here. There will be emissions. There's a lot of protocols that won't have emissions because they have this fixed supply. And fixed supply is a very dangerous thing, in my opinion. Um, I think the supply needs to expand into this inflationary fashion. That's why Bitcoin is so good, and that's why Curve will be so good as well. The greatest irony is that folks are so critical of Curve's monetary policy, yet it literally is a highly comparable monetary policy to that of Bitcoin. That blows people's minds, and then they're like, "Oh crap, it is." I mean, you either got an inflationary monetary policy, even, but Ethereum doesn't compare nowadays because it has the burn component. That's a whole nother topic of conversation. But if you're talking about protocols, you either got inflationary monetary policies, which should just have perpetual inflation, um, or you have disinflation, or you have a mutable inflationary component. And I'm pretty sure the drones have a mutable inflationary component nowadays. It's before that, I believe it was just disinflationary. I don't think they want to push their way into inflationary, but I think they want to potentially increase degree of disinflation. I think they also have the buyback and lock component. Just the alignment of incentives. What they built is just extraordinary, it really is, because their initial vesting, what they earned as a protocol, was permanently locked exposure, which means that's where they get these weekly buybacks. That's where flight school comes from. Um, and then the weeklies, not weekly, but it's for public good. Sometimes they buy back from the market, and that's just such a wild concept because that's literally protocol revenue because of how they chose to allocate protocol owned tokens being used to decrease circulating supply and improve market conditions. I'm so interested in what they come up with in the Dromos event. This is like next week. It's going to be quite interesting to say the least. And coincidentally, John talking about the Dromos speakers list might be hinting at something very bullish. Frax, Reserve, Hyperlane, MetaDex beyond just mainnet, Solana, Sui, and others. Oh, dude, do you know how exciting? Uh, I- I talked about Curve Federation, and Curve Federation is my largest exposure, and I believe it is still appropriately that, meaning I have a very high opinion of the drones for the reasons I just described and more. Alignment of incentives is flawless, in my opinion, but it's still foreign exchange. It's not credit. It's not derivatives. It's not liability printing nor liquidity. It's liquidity financing. Frankly, it's foreign exchange and liquidity financing. But Curve is the five businesses. It's credit, derivatives, and liability printing. So even though Curve may be struggling still, I still think it's the appropriately sized for what I'm most interested in and what I think is the biggest business in crypto, which is credit and liability printing. I'm very excited for what they're coming up with, John. So I'm all ears, all eyes, and of all things, it's a good part of my portfolio exposure to the drones at this point. Crypto Jake, thank you. Every token has emissions, drives me crazy. While people only laser focus on emissions when it's in DeFi, if everyone they missed the point. At one point back in 2020 and 21, folks were playing around with deflationary tokenomics, and they were a disaster. They all failed all those protocols with deflationary tokenomics, and that's very counterintuitive because everyone expects less supply. Oh, number go up. It's scarce. There's too much supply of it. And it's literally the Bitcoin narrative. Oh, Bitcoin's so scarce. It's a fucking inflationary protocol. The narratives out there are so warped and twisted and so just wrong. That's a freaking inflationary protocol. Disinflationary. That's why it's good. It's, it's so incredible how wrong some of the stories are and some of the narratives are that folks talk about so vigorously. So good point, Crypto Jake. Good point. KD, cheers, Cap. Much a pleasure. Chicago PTC holder, we need those doses of rationality. Cap once a week seems insufficient. You don't owe us anything, so I appreciate all you do for us. My pleasure. I know that the 2 days a week is a good routine for me. Obviously, Monday, the reason I took off is nobody gives a crap about rational storytelling when everything's literally plummeting. But when everything calms down at the end of the week on a Friday and Bitcoin's back above 100 and 1,000, that's when it all makes sense. That's when I probably didn't need to overreact. And obviously things are depreciating, but look, if it closes above the 50 SMA, that looks pretty good. Next Sunday is really when we want to look at things because if it's back up at 105 next Sunday, that means, all right, fine. You wick below the 50 SMA in the weekly, you're back above it. So guess what? It was just noise. It was just a mean regression, like right here and right here. And that's our 2025 trajectory thus far, even though this first circle is in Q3 of 2024. So much noise out there. Conceptually, why do you separate buybacks against giving you the yield directly? Because buybacks keep it internal to a company and we're internal to a project. And I don't like that. I don't, I want the money. It's a very simple equation that most people glance over, and it's primarily from a stock market standpoint where buybacks raise the stock price, and people think in terms of compounding and they think in terms of tax favorability. But in crypto, it's a whole different equation. Give me the it's not cash flow. We call it cash flow, but we're not paid out in cash. We're paid out in property and were paid out in unrealized property, arguably, and that's some of the legislation, like Cynthia Loomis wants to push for, and that's what the Jarrett case pushed for, and now there's the Jarrett 2.0 case, which is open-ended pretty much, probably until Congress does what Cynthia Loomis is talking about, that staking rewards are unrealized, and they're unrealized because it's property, it's not cash, and that's a good part of my memorandum documentation. Um, where what we receive from claims is unrealized property receipts. So, okay, so what's the cost basis? So the cost basis is either zero or it's fair market value. Is it fair market value on like deposit into the protocol, not by us, but by the third party? That'd be weird, but that's the voter escrow partnership memorandum. So that's an interesting, a little bit edgy, a little bit far out there, but it's an intriguing memorandum that potentially has some traction. Um, but what's the cost basis? And these are legitimate entire conversations to be had. I don't think zero makes sense. Um, I think, but that's up. That's literally what Congress is. That's what it's up to. That's who it's up to. It's up to Congress. Maybe it is zero, but that's up to them to define and decide. And then it's going to depend on the entity. Is it personal? Is it corporate? Or is it a trust setting? Because there's additional rules involved there. But I would argue in all of the cases, it's probably going to land in terms of unrealized property receipts. So if you claim like $1,000 worth of USDC, um, at worst case, you put that USDC in a bank account, you're realizing it, and you owe tax on 1,000. At best case, your cost basis on getting the $1,000 in USDC is $1,000. So you could put it in a bank account. There's no cap gains because you got $1,000 cost basis. You're selling for $1,000. So there's no cap gains. That changes the equation. Uh, folks, a lot of folks might not like that, especially like tax collectors, because say, oh, there's no tax there. But there's a larger part of the equation of this tax system because they're going to spend the money. There's sales tax. There's property tax. Maybe you buy a property, or maybe the fact that we don't get the vast majority of our claims stablecoin denominated. You get a Bitcoin denominator, let's say, and the price of Bitcoin changes over time. So if your cost basis is $1,000 worth of Bitcoin when you receive it, but then you sell that Bitcoin for $1,250 worth of USDC in 2 months, you got a $250 capital gain. So these are all the potential nuances to all these rules. And I just find it fascinating to contemplate buyback versus cash flow, especially in consideration of the very unique nuances of what crypto is. And crypto is not money, not money, it's property. Therefore, there's very different rules and very different considerations, especially with regard to claims and custody and what's called dominion. Dominion is everything in this conversation. Dominion is really discretion. So you can't spend the claim, you have to claim it first. So do you really have dominion? You first have to take dominion, take possession, and then you could exercise dominion. Then you could spend it, then you could exchange it, then you could transfer it. But if you are restricted in any way to only the claim operation, you don't have dominion. You can only do one and one thing only. That's not dominion. Dominion is like totalitarian control. You got $100 in your pocket, you got pure dominion. You can do whatever you want with that $100. So dominion is a very powerful word. That means almost everything. That's kind of the center point of a great deal of conversation about crypto accounting, dominion, and realization. Eisner v. Macomber is realization. Obviously, Glenn Shaw Glass obviously talks about realization as well, clearly realized as in past tense. That is the tense as the judge used the word realize, clearly realized, and he used the word dominion. But Eisner v. Macomber has to do with IOC 1001, which is about capital gains. Anyhow, complex topic. Love that shit. Good morning, Cap. Claiming and being calm. That's what else? That's it. Or not claiming, delayed claimification, so to speak. As this is the season, I would argue, to do it. Um, you're longing the market by not claiming, and then you. So my business rules require me to convert anything I claim into stablecoins immediately, because that allows me to maintain basically an unchanged cost basis. So I have de minimis rules in my business structure that if I'm claiming and converting the stables immediately on a $5 or 0.05% variance, including swap fees and slippage, I don't have to consider that from a de minimis standpoint. Basically, for all practical purposes, the same amount of value. If anything, it's a loss because of slippage and transaction fees. You claim $1,000 worth of Bitcoin, you're not selling it for $1,005 in USDC. You're selling it for $998 in USDC or 995. There's always a loss. So that's a good part of how I simplify my accounting. Anything I claim must immediately be converted to USDC, and that allows me to do this de minimis type of treatment. And a good part of accounting is being consistent. So if you are doing the same procedures, policies, and procedures over and over again, and the inspector's like, all right, well, he's doing the same thing over and over again, there's consistency. And that's a very important characteristic of appropriate and reasonable accounting. Hello, Noah. Look at the daily and overlay Wickoff. Yeah, with Wickoff distribution. Of course, these markets are manipulated, so manipulated. So what does manipulation mean? It means it's all noise. And focus on the rules. You got five businesses in crypto. You got four rules in crypto. Rule number one, own more assets. Rule number two, know when to not buy assets. Rule number three, fuck you, pay me. Rule number four, don't neglect cash. Rule number four is mission critical because as you're managing your capital, um, cash is used to buy assets. Cash is used to buy food. Cash is used to pay bills. So if you have cash, you can choose to invest, you can choose to feed yourself, or you can choose to pay bills, which may include feeding yourself redundantly. The point is, you can't do shit without cash. If you don't have cash, then you have to sell assets. You get cash to do all the things we just said. So the point is, if you don't neglect the cash position, you got an effective cash position, you're going to be okay. Means you could avoid being a forced seller of assets. And that's how you get through periods of time where there's a lot of volatility or negative depreciation in an asset's pricing. You have cash on hand, so you don't have to sell assets. Um, it's a good part of what it means to be resilient, have a backup plan. And it's cash. Very simply, cash management. Look at Buffett, 300 and what, $40 billion in cash. Guy could buy 275. Well, Berkshire could buy 275. No, what was it? 475 of the companies in the S&P 5. He could literally buy almost the entirety of the S&P 500. I think that was one of the metrics. Astounding cash position. Talk about not neglecting the cash position. All right, not bad. About 15-minute stream. Got through commentary, got through a little bit of market talk, a little bit of backstory, a little bit of context for how we got to where we are, where we came from. Definitely closed on a couple of good accounting points. Talked about how to keep rational. And that's the most important thing we could always talk about every stream. Let's wrap it up for today, Friday, November 7th, 12:24 p.m. 200 people made it to the end of the stream and are now that much more rational because of it. I appreciate each and every one of you that show up for this stream. Gives me a good purpose. I get a great deal of satisfaction talking about these things. So thank you. And I hope my stories help you guys handle these markets a little bit more comfortably. Don't be uncomfortable. Number one rule is to you got to be able to sleep at night. And if you can sleep at night, that means you can let time pass. And that means you can follow the four rules. If you can follow the four rules over time, you will be successful. Catch you guys on a Monday after the weekend. See you then. Peace.